please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Markets Today Talk Back, the show where we tell you the details of 8 hours of trading in the markets in just 5 headlines. I'm Lata Venkatesh, with me, my colleague Prashant Nair. Hi, Prashant.
Lata, hi. And over the next 30 minutes, we will discuss the top 5 market stories and our experts will answer your questions. Today, we have Deepan Mehta, member BSc and NSC, and technical expert Ashwini Gujral with us here on the show. Gentlemen, thank you very much, both of you, for being here. Before we start putting the questions that we get from our viewers to you, let's quickly take stock of what happened as far as markets are concerned. We were basically coming after holidays. I mean, 2 days worth of global markets had to be digested, and not all of that was positive to begin with. So it looked tough in the morning and sort of went deep in the red during the course of the session. Lata.
Yeah, I mean, as you said, there were a couple of positives actually on Thursday evening before we went into our long weekend. National Auditors Regulator had been appointed, which normally should inspire confidence in corporate balance sheets in the coming years. As well, the BJP over the weekend indicated that it had strengthened its position and therefore the chances of it continuing in power. Normally, these would have been seen as positive macros by the market, but as you pointed out, there was the big macro negative with global trade getting probably a huge setback, globalization getting a setback with President Trump imposing tariffs. You could, Asian markets and the Wall Street indices and European indices had fallen already severely on Thursday and Friday. And clearly, even today, early morning, the Asian markets were not quite showing signs of recovery. Of course, they had the Chinese meeting also, political meeting also to contend with. And therefore, we just had to fall in line at least. Considering that actually we perhaps did not fall as much as at least the SGX futures indices indicated. We have had our own headwinds in the form of the Nirav Modi scam. And because of even tighter RBI rules, the expectation is that lending will be tough. So there was that local problem also to take cognizance of. But surprisingly, it was not the banks that led the way today on the downside. It was led by metals, which were hurt by this tariff issue. So actually, private banks and IT companies were the small pockets of buying. But there were some individual performers, you will have to say.
Well, yeah, I mean, but, to begin with, I think metals really took it in the chin. The top loser as far as the market is concerned in terms of sectoral index, energy stocks were lower and auto stocks were lower as well. I mean, Hero, Bajaj, you can go on.
Despite good monthly numbers.
Good monthly numbers. Tata Motors, I mean, for example, if one looks at stocks, Tata Motors actually was one of the biggest Nifty losers. Hindalco was down, Tata Steel was down. I mean, I could go on. Vedanta, Jindal Steel and Power, etc., etc. I mean, all of them, metals largely lower. Reliance, a heavyweight, lost. Bajaj Auto, Ambuja Cements were some of the other Nifty losers. Large cap stocks which were higher, there was Tech Mahindra, there was Sun Pharma, and there was TCS. I mean, IT you could sort of point out and say that, well, that was maybe the one index which was actually higher. Broader stocks which were lower, NMDC, there was Quick Heal which sold off, Nalco which actually sold off as well. And in terms of broader market strength, IDBI, I mean, it's done quite well recently. Vakranji, BEML, I mean, it was 2,000 rupees not very far back, sold off to 1,200 or so. It made a big comeback, some news there. And Godrej Agrovet and Thomas Cook were other stocks which stood out with volumes on the higher side. Lata.
Okay, well, straight away to our experts, Deepan and Ashwini are with us. Ashwini, well, index ending 1% lower, but a distance from the 200-day moving average. Is it still a short trade, or do you think the markets may resist at current levels? After all, they showed some spunk last time when the Nifty was at 10,350.
See, basically, the first half, the 100-point gap down was Friday and Thursday's action that was getting discounted. That we didn't close at the lows and came back was possibly tonight's action that's getting discounted in the market. We are revisiting 10,300 very frequently, and chances are, post a bit of sideways, we will go through this level, because it's clear that while the market bounced back, the market breadth remained fairly poor, and there is consistent pressure at higher levels. So the bears have really no reason to cover other than, when things get too overextended. So that way, I think all rallies now towards 10,400, 450, if you get a gap up tomorrow for some reason, that'll be a good selling opportunity. Similarly, on the banks, any sort of 100, 150 point rally will get the sellers back.
Okay. Well, same question to you. Dipan, are you buying the fall? Any part of the fall?
Yes, I think gradually we are getting into the stocks which are there on our shopping list, and I said before that this is a great time to buy blue chip stocks which we have missed out in the past, which are in a kind of a secular growth momentum, maybe concept stocks. The valuation may be slightly expensive, but at least they've corrected maybe 15-20% from the top, so that's worth a little bit of comfort. So yes, I think this particular correction is an opportunity to try and improve the quality of the portfolio.
Okay, so that kind of sets us up as far as market view is concerned. Let's move on to the second big story of the day. And that's Asian markets, which fell for the second straight day after US President Donald Trump's stiff tariffs on steel and aluminum stirred fears of a full-blown trade war. The Japanese market ended 0.5% in the red. The Hang Seng closed over 2% lower, and the Kospi closed down over 1%. European markets, however, opened in the green, steadying after falling for 2 days straight. We actually earlier in the day spoke with Ken Ping of Citi Private Bank and Jeffrey Dennis of UBS on the seemingly looming trade war. Listen in to what they had to say.
We'll have to see whether this goes beyond steel and aluminum, because just at the current stage, steel and aluminum accounts for such a small share of global trade, particularly with China, that if it stops here, it wouldn't matter that much. However, what I do see as a major risk is how Trump goes, how the U.S. administration goes ahead with the investigation over intellectual property, which could apply to a much wider set of products, and also how the U.S. administration is going to improve its ties with Taiwan, which kind of becomes a bit of a deal breaker for China.
Tariffs on steel and aluminium they're important for a number of countries, but they are not that important if the biggest potential flashpoint in terms of trade conflict is between the U.S. and China. So within the emerging market space, they're very important for Korea, for Brazil, for Mexico, and of course in the developed market space for Canada. This is a risk to the bull market that we're still supporters of, because if this does escalate into serious world trade conflict, and some countries will retaliate against these tariffs, well then that does pose a threat. I don't think China's going to react that much to this.
Okay, so at the moment actually not expecting so much of a reaction, which may perhaps explain the temporary truce in global markets and the bulls kind of getting back to work, but no such luck in our markets. And that brings us to the third headline today. President Trump's move to impose 25% tariff on steel imports and 10% on aluminum imports hurt metal stocks, not just in India, but globally and even on the LME. Hindalco closed down nearly 5%. Tata Steel ended the day close to 3% lower, SAIL down 3.5%, while Vedanta was down 2.5%. Nigel is here with some quick analysis of what brokerages are making of the impact of the Trump tariffs on Indian steel companies. Nigel.
Well, a 25% tariff is what is proposed on steel imports into the United States, while for aluminum, that proposed tariff rate is approximately 10%. Let's focus on the steel bit first. Now, the United States is a net importer to the tune of around 25 to 26 million tons of steel, and bulk of the imports come in from Canada, the United Kingdom, as well as Brazil. From the Asian markets, well, China as well as South Korea, they account for nearly around 4.5 million tons odd. Well, in terms of India, India exports only around 600 to around 700,000 tons, and that would account for only around 2% of the total imports into the United States. So that's a rather small number. HSBC says that they expect a very minimal impact on domestic steel producers in India. Well, what they're saying is that, in fact, keep an eye out on global prices, because if that corrects, owing to those exports that normally were going to the United States, if they find their way into other markets, that's what could put pressure on the global steel prices and in turn impact the EBITDA numbers in FY19 itself. Moving to the aluminium bit then, remember in terms of the US market, bulk of the aluminium requirement is met via imports, close to around 90-91% odd, and importantly, the capacity utilization levels of various aluminium companies, that's drifted down to around 40%. So the aim is to increase these capacity utilization levels as well. Canada accounts for nearly around 43% of the imports into the United States, and Hindalco obviously will be a stock that would be in focus. Now, that stock ended down in today's trading session. Jefferies, remember, they have given us some numbers. They're saying out of the total EBITDA of Novelis, nearly around 39% comes in from the US market. But they're also saying that bulk of the raw material requirement as well comes in from Canada, and that wouldn't be very, very good news if there's a blanket ban in terms of, or a blanket tariff that's levied on all imports coming into the United States. So we'll have to keep an eye out on that factor. Remember, in terms of the domestic operations as well, if the LME prices do fall, then close to around 50% of Hindalco's current production is exported, and that wouldn't be very good news because falling LME prices would impact the domestic upstream operations.
Okay, Nigel got that. Now we have to get to people who own these kinds of shares. Gaurav has 2,000 shares of Hindalco, and he writes to us that he bought it at 268 rupees, wants to know what should be his next move. That's what he has tweeted to us. Ashwini, what are your thoughts? 268 rupees.
See, that's the problem that occurs when you buy in good news. Now, the problem is that whether, all this Trump action amounts to anything or not, it will surely take the metal stocks to the cleaners. And Hindalco has just broken its 200-day moving average. It's made a kind of a double top. So, you are looking at 180 thereabouts, 180 to 200. Now, the sensible thing is that you accumulate more at those zones and hope that, whenever the next rally starts, you will be able to get a better price in terms of average so that you can make money faster. Otherwise, 267 is going to be difficult to come by. If you're a short-term trader, etc., your stop should have been hit by now.
Deepan, where would you be on this entire metal story now with this news of, trade tariffs, etc.?
Yeah. See, that's the problem when you invest. That's the problem when you invest with commodities, that there is just too many variables which come into play, and government policy, import-export rules, demand-supply mismatches, capacity creation, or getting out of manufacturing. These things have a very major impact on the prices. And truly, only if you are an industry insider will you be able to profit from trading in commodity stocks. So while we thought that there was a good trading bounce because of synchronized global recovery, now that entire scenario gets into a bit of a cloud because of this move overnight which came from the US. My sense is that it's better to kind of throw in the towel even at these levels, book the loss. We have a kind of a correction in play, and maybe switching out of Hindalco into some of the more quality stocks, which are in secular growth mode, maybe more sensible strategy. And perhaps you could recover the loss that is being booked in Hindalco over there, because it's going to be very volatile for metal companies, and assessing where the tops and bottoms are is going to be very difficult. So I would say still switch off of Hindalco into something far better, which has a more steady sort of a business setup.
Okay, take it. Got your point.
Deepan Mehta and Ashwini Gujral have been answering your questions. We've gotten through 3 top stories of the day, so on to the 4th one. Select bank stocks like State Bank of India and Bank of Baroda bucked the losing trend today. But the Nifty Bank Index closed at the lowest level this year, is down 3% in 2018 so far. We got a question. Ramesh wants to know if he can buy Federal Bank shares at present levels for a period of 1 year. Federal Bank, of course, is also corrected. So let's put this to our experts. Deepan, what would you tell him? He wants to buy Federal Bank at current levels.
Yeah, I think certainly Federal Bank has seen a sharp improvement in the performance since the new CEO has taken over, I think a few years ago or so. And they've been able to improve the balance sheet quality and are getting into kind of decent growth rates as far as net interest margin, net interest income and fee-based income is also concerned. And valuation also pretty reasonable. So yes, I think the investor could look at buying into Federal Bank. But in situation like this, it is better to go for frontline banks, something like an IndusInd Bank or HDFC, Kotak Bank. They may be first off the block when the entire banking sector reverses. And these stocks also have corrected. So in my entire theme of trying to improve the quality of the portfolio, while you can certainly buy Federal Bank, I think that the returns will be better and the risk reward certainly favors buying into a large size bank of the ones I named like HDFC or IndusInd, yes, also could be considered, or even Kotak Bank for that matter.
Okay, well, there's a question on the one bank you probably didn't allude to, Deepan. This question comes to us from Adrian. He has 100 shares of RBL Bank, which he bought at 529 rupees. He says he's a long-term investor and wants to know what his next move should be. Okay, Ashwini, would you like to take that?
See, there's a time and a place for everything, which means that banking was last year's story. Generally, when the rate cycle is going down, that's when financials or banks perform the best. Now in a deteriorating macro all over the world, rates going up, including in India, etc., banks will not perform the way they did earlier. Today's leaders are Mindtree and Sonata and all the mid-cap IT stocks which went up even today, NIT Tech, etc. So if you are that sort of an investor who wants to make money in the next 1.5 years, then IT is your sector. But if you are that long-term investor who's willing to wait and till the rate cycle goes up and then starts coming off, then you can probably start accumulating. But I don't see great value in financials or buying financials right now.
Okay. Well, actually, you have presaged the next question and the next headline, Ashwini. The final headline from the markets today were that IT stocks were in the green. They were the green patch in today's trade, with index IT stocks, TCS and Tech Mahindra, clocking in big gains. TCS over 2% higher and Tech Mahindra ending the day with more than 3% gains by end of day. The Nifty IT index itself closed nearly 0.7 higher. We spoke with Moshe Khatri. He's from Wedbush, Managing Director of Wedbush, and a long-time watcher of IT stocks across the world. Listen to what he had to say.
At this point, it seems that spending trends are looking better. Look, the industry went through a very massive disruption during the past 3 years. The models moved from more to less capital-intensive, labor-intensive models. Trends look good. The only thing that can kind of make things go south is, the politicians, but we'll see what happens. The largest vertical in the sector is BFSI, and that's the wild card. BFS, had a good start last year. It didn't end well. BFS is having a good start this year. So far, it's looking better. Most of the investors that we talk to are still staying clear and away from the sector. So we definitely will see the incremental buyer if we will continue to see some of the trends that we thought were going to happen earlier this year.
Okay, that was a cautious Moshe Khatri, but still optimistic. Unfortunately, out of time. Deepan, Ashwini, thank you very much for staying by.